Fraud in the freight industry is more than just a nuisance. It can have long term financial consequences that cripple a brokerage's ability to grow. In an industry where cash flow and credit are lifelines, fraudulent activities such as double brokering, identity theft, and non payment schemes can destroy a broker's financial stability. Beyond the immediate losses, the real danger lies in how fraud impacts a brokerage's creditworthiness and future financial opportunities. Freight brokers need to understand the hidden costs of fraud and the proactive steps they can take to safeguard their business. In this video, we'll explore how brokers can protect their financial standing and maintain the trust of carriers and shippers alike by implementing strong fraud prevention strategies and leveraging credit management tools. We'll first discuss the freight fraud surge and its impact on credit. Fraud in the freight industry has been escalating in recent years, with double brokering and identity theft among the most common threats. According to industry reports, freight fraud costs businesses hundreds of millions annually, with bad actors exploiting vulnerabilities in broker and carrier networks. However, the damage goes beyond lost loads and unpaid invoices. Fraud directly affects a company's credit profile in several ways. 1. Increased outstanding debt. When a fraudulent carrier disappears with a load payment, the broker is left with unpaid invoices. This increases accounts receivable balances and negatively affects financial ratios used in credit evaluations. 2. Lower creditworthiness. A damaged payment history from fraud-related disputes can lower a broker's business credit score, making it harder to secure better payment terms from shippers or access financing. 3. Strained relationships with carriers. If a broker unknowingly works with a fraudulent entity, it can create distrust with legitimate carriers, potentially limiting future partnerships. And 4. Difficulty securing funding. Lenders and factoring companies review credit reports and financial stability before extending credit. Fraud-related financial losses can make it more challenging to get funding when needed. To combat these risks, brokers must be vigilant in protecting their operations and maintaining a solid credit profile. Next, let's dive into how to detect and prevent fraud before it affects your credit. Fraud prevention starts with due diligence. Freight brokers must establish proactive measures to verify identities, check credit histories, and validate business legitimacy before engaging with new partners. Here are a few key steps to detecting and preventing fraud. 1. Verify carrier and shipper information. Use business credit reports from reliable sources to check payment history, business longevity, and any red flags associated with a potential partner. Cross-check carrier and broker MC numbers with FMCSA databases to confirm legitimacy. Avoid working with carriers that have limited operational history or inconsistencies in business information. 2. Monitor payment and billing activities. Be cautious of carriers demanding upfront payments before a load is delivered. Regularly review payment records to identify irregularities such as duplicate invoices or missing documentation. Implement credit monitoring services to receive alerts on any changes in partner credit status. 3. Protect your brokerage's identity. Avoid sharing sensitive business information with unverified contacts. Use secure portals for financial transactions and broker-carrier agreements. Report any suspicious activity to industry fraud prevention organizations. By leveraging credit monitoring and reporting services, brokers can quickly spot warning signs and avoid fraudulent partnerships that could impact their financial health. Next, let's explore ways to recover from fraud and steps to restore business credit. If your brokerage falls victim to fraud, taking immediate action is crucial to minimize long-term damage. Here's a step-by-step approach to restoring your business credit. 1. Notify credit reporting agencies. If fraudulent activity has affected your brokerage's credit standing, contact credit agencies to file a report and dispute inaccurate information. A formal dispute process can help correct misleading credit data. 2. Report the fraud to authorities. File a report with the FMCSA to prevent others from falling victim. Work with industry groups like the TIA, Transportation Intermediaries Association, to raise awareness and share fraud prevention strategies. 3. Communicate with lenders and financial partners. If fraud has led to financial strain, reach out to lenders, factoring companies, and financial partners to explain the situation and request temporary relief measures. 4. Implement stronger credit controls. Use business credit protection tools that provide ongoing monitoring, dispute assistance, and fraud alerts. Require updated carrier packets and financial verifications before working with new partners. Next, we'll look at the role of receivable reporting in fraud prevention and credit growth. One of the most effective ways to protect against fraud and strengthen business credit is through receivable reporting. Many brokers overlook the importance of reporting payment history to credit agencies, yet this practice provides major benefits. First, builds a strong credit profile. Reporting receivables ensures that your brokerage establishes a solid credit history, which can be beneficial for securing better payment terms. 2. Encourages on-time payments. When carriers and shippers know that late payments will be reported, they're more likely to pay promptly. 3. Flag high-risk partners. Credit agencies compile data from multiple sources, helping brokers identify companies with poor payment histories or past fraudulent activity. Brokers can integrate credit reporting solutions to gain better visibility into their partners' financial health while also improving their own credit standing. And finally, we'll dive into balancing debt and cash flow in a fraud-prone industry. Managing debt and cash flow is critical for freight brokers, especially in an environment where fraud can disrupt financial stability. Maintaining financial flexibility ensures a brokerage can cover operational expenses, mitigate risks associated with fraud, and position itself favorably when negotiating credit terms or seeking financing. Here are some best practices to maintain financial stability while protecting against fraud. 1. Maintain a debt level that supports growth. Avoid excessive debt by ensuring revenue streams are stable and receivables are being paid on time. Use credit monitoring tools to track days to pay metrics, which provide insights into whether a partner pays invoices promptly. 2. Diversify your revenue streams. Don't rely too heavily on a single shipper or carrier, as one fraudulent incident can create major cash flow disruptions. Seek partnerships with financially stable shippers and diversify brokerage accounts. 3. Use factoring and credit solutions wisely. If using factoring, work with reputable companies that understand the freight industry and verify the creditworthiness of invoices. Utilize credit protection plans to shield against potential losses due to fraudulent transactions. Freight fraud is an unfortunate reality in the industry, but its impact on business credit, cash flow, and overall growth can be minimized with the right strategies. By verifying business partners, monitoring credit activity, and maintaining strong financial management practices, brokers can protect their businesses and sustain long-term success. Industry tools such as those offered by Transcredit can help brokers monitor credit risks, report receivables, and gain insights into the financial health of potential partners. Utilizing such services ensures brokers are equipped with the necessary information to operate confidently. By taking proactive steps to safeguard credit and cash flow, brokers can not only mitigate fraud risks, but also strengthen their financial stability, allowing them to focus on growth and operational efficiency in an evolving industry. We appreciate you for watching and hope you gained some additional knowledge to help navigate the growing issue of fraud in the freight industry. Be sure to visit our website at www.transcredit.com to explore the many ways that Transcredit can help, and don't forget to like, comment, and subscribe to our YouTube channel @Transcredit. We'll see you next time.